What if you could make a quick 200 or 300 bucks in just a couple of weeks? And the best thing, you don't even have to get the direction of the stock price right. You could think it's going to move down and it moves up, or you could think, hey, this thing's going to the moon and it goes down. You still make money. Well, we have earnings coming this week in one of the best consumer defensive stocks. It's actually in the beverage and wine and distillery industry. So, yeah, I don't think that's going away anytime soon. Constellation Brands has earnings this Wednesday morning before the bell, and I'm going to show you exactly the trade that I'm putting on Tuesday so that we can capitalize and make 200, 300 bucks in just a couple of weeks. Before we get started, if you appreciate the time and effort that goes into making these videos, if you can hit that like and subscribe button down below, I really appreciate it. It helps to get the video out to more people, so thank you very much. Disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your own research, and if you're new or learning options, I recommend you start small. If you're interested in getting the most bang for your buck and reducing risk with options, be sure and download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stock outright. Use the link below and open an account with Moomoo. You can get 8.1% APY on uninvested cash and up to 15 free stocks. 5 for your first $100 deposited, and then 10 more if you deposit just $1,000. You also get the free charting software that's great, and I use it every day. Moomoo is a zero commission online trading platform brokerage. All right, guys, let's take a look at Constellation Brands, ticker symbol STZ. They beat Q1 earnings, so they did well last quarter, and they are pegged this quarter. Let's cut that. All right, guys, let's take a look at STZ, Constellation Brands. They've got earnings coming out this Wednesday, so we want to make sure that we put this on this trade before the close on Tuesday. That way, when the market opens on Wednesday, there'll be that volatility crush and the premiums should come in. So we are going to sell an iron Condor, and this article by Zacks actually talks about why Constellation Brands will beat or miss Q1 earnings. It is a high cost, fairly high right now, top end of the range. We'll look at the chart, but you can kind of see it here. The first quarter earnings is pegged at $3.46 per share, and that will indicate an 18.9% earnings growth rate, or earnings growth from a year ago. And the consensus mark for revenues is $2.7 billion, so a 6.3% increase from the prior year's figure. And it's an alcohol behemoth, so they've got a lot of different brands. And last time they delivered a 7.6% surprise. So you can see right here all the earnings beats. They've beat quite a few times. Here's a miss, here's a miss, and here's a miss. After this miss, it did go down. After this miss, it went down, but then it went right back up. Went up after this miss. So guidance comes into play as well. So that's what I like about this strategy is we're doing an iron Condor. So no matter what way it goes, if it stays within a range, we make money. So it's premiumization. Wow, great word. Efforts. So basically what it's been doing, it's got a beer portfolio, and they've got Modelo Especial, Corona Extra. Those are newer brands, Pacifico, and then Modelo Chelada. Those have all been selling really well, and the premiumization strategy has been playing out well as also. So they talk about these power brands, high-end, including the Prisoner brand family, Kim Crawford. I've had that wine before. Mayomi, haven't heard of that one, but these are all within the wine and spirits segment, and they've been key drivers for them. And they've got seltzers. I know that kids are drinking seltzers now. I've got girls and sons that are actually my girls are over 21, and they've started drinking the seltzers. So luckily not too much, but they do like seltzers and their friends. So I know that those are selling really well. Um, and there's an ongoing inflationary environment as well. So they talk about, hey, even though the profits and revenue are growing, it's still going to be a challenge for profit margins. And with inflation and the overhead cost right now. So that's kind of an overlook there. Now, if we go to I'm using Tasty Trade today on this. If we punch in STZ up here, and that's Constellation Brands, you can see it's trading at $256. Let's look at the chart. Here's the 1-year chart, and here's where it is, 256. So if we go to the trade page, and I'm going to look at the July. So earnings is this week, Wednesday. 18 days to expiration. It's a regular option chain, so it's not the weekly. So if we actually take off the weeklies and just do the regulars, it's the first one coming up. And what I'm going to look to do is sell an iron condor. So the rights are puts, the lefts are calls. We're going to sell a put credit spread and see what we can collect. So I'm going to go to the 245 because it's the 22 delta. So that gives us about a 78% chance of being profitable. $1.80, and then we're going to buy the 240 by clicking on the ask. We'll only collect, not 240, we're going to go 235. We're going to go $10 wide, and we're going to collect $1.22. And we want to collect close to a third the width of the strike for the whole trade. And this is an iron condor, so we're trading both sides. Now, I'm going to go out to the 267.5 and click on the bid, and we collect $2.15, and then did 277.5. We buy for 85 cents. So overall, we're collecting $2.60, and since one set of contracts controls 100 shares of stock, this is times 100. So it's $265 that we will collect for placing this trade. Now you can see this green range all the way up to 270 and down to 242 is our profit range. So if the expected move, it looks like is $11. This is the expected move right up here. So 256 plus 11 is 267, and that's right about where we're at. And then minus 11 is 245, and that's right where we're at. So it's kind of a wash. That's kind of how options play out. So as long as we stay within that range, if it comes in between that range, we profit and make money. And we can go to the curve mode here, and you can see that range. We can go to the analysis tab, kind of spread it out a little so we can see. But this is how it, oops. Okay, so this is how it looks on. We can go down to about 242.5 up to 270 and collect $265 as long as it stays within that range over the next 18 days. And we're not going to put this on until Tuesday. It's Monday, so tomorrow near the end of the day, because I want to have it centered. As you can see, I want the stock price right in the center between my two spreads. So we may need to adjust this tomorrow. IVR may go up, and that may help us as well. So we're going to put the trade on at the end of the day tomorrow. And if we go to the chart, you can see this is an annual chart. And again, remember where we're at, 242 to 270. If we look at the annual chart, 242 puts us down here. There's a lot of support. You can see right here there's support, right here there's support, and then it did dip below back in October of last year, but it's doing well. So I like this support level at 242, and then we had 270 on the top end, and you can see there's resistance right around here's 270. So we're in that safe range where it can move, and I like it. Even over the last year, it's pretty much stayed in between that range. Now, if we look at the financials annually, income statement, revenue, net income, it's trending up, increased year over year. So it's a solid stock. It actually pays a dividend, I think 1.5%, something like that. And annual, the assets and liabilities are solid as well. Ratios, a little bit high, 27 PE, but still good. And the gross margin right there, 50%. That's excellent. Forecast, you can see all these buy ratings. There are no sell or strong sell. The expected price is at 256. Analyst, all the analysts, 23 covering it. Nobody has a sell. They're all buy and a few hold, 3 hold, but everybody else is a buy and a strong buy. And the expected price is $300 over time. So that's what I like about it. So again, all we do from here is hit review and send and place the trade. But let's wait until tomorrow and see where the stock moves. It's down to $1.26 today, so it's probably going to stay in this range. But IVR is not going to tick down. It should stay about where it is or even tick up a little. But I'm going to wait until tomorrow and put this trade on. So that's how you do it. All right, guys, that caps off today's video. Remember to hit like and subscribe down below. Be sure and download that free options workshop. Join Moomoo, get your free stocks and 8.1% APY on the zero commission option trading platform brokerage. And leave a comment, ask a question. I answer every one. Thanks for watching. I'll see you in the next one.